Wall Street's real crypto plan is already in motion. Don't get fooled by the panic. Here's what's actually happening behind the scenes. This week, the world's most powerful money movers pulled off a move that will rewrite the rules of investing forever. For years, TradFi laughed at crypto. I know, I've hated it for a long time. But now, Robinhood just brought Wall Street to the blockchain, flipping the game right on their heads. Solana's first yield-paying ETF is about to go live. Trump and the White House are calling for rate cuts that could kick off the wildest asset boom any of us have ever seen. This is bigger than Bitcoin ETFs. This is the iPhone moment for capital markets. If you're not locked in right now, you're gonna miss the everything pump. And this time, you might not get another entry. This week, Robinhood went from a trading app to a global on-chain super app. Robinhood's team confirmed the Robinhood Chain, a layer 2 blockchain built on Arbitrum's tech stack. But they didn't stop there. In Europe, users can now trade tokenized equities of the most sought-after private companies in the world, directly on-chain. Users in the EU now have access to more than 200 tokenized stocks and ETFs, as well as features like staking, perpetual futures, ETH and SOL staking for US customers, advanced trading tools, a USDG stablecoin, AI-assisted trading agents, crypto cashback rewards, and more. It's the everything financial super app. What an amazing progression Robinhood is doing. Screenshots from the app reveal live ETH staking, real-time tokenized stock trading for companies like Nvidia and Apple, and interfaces for perpetuals, all integrated into a single platform. You can even get paid in crypto rewards for using the platform. Robinhood's strategy is methodical. Phase 1 delivers tokenized stocks. Phase 2 brings 24/7 liquidity with Bitstamp. And Phase 3 unlocks composable, truly DeFi native assets. So why is all of this rolling out in Europe first? Well, I'll tell you. Robinhood just acquired Bitstamp and used a regulatory loophole, letting them offer tokenized assets that legacy US exchanges can't match. So Robinhood now competes in spot trading, derivatives, 401k, wealth management, prediction markets, sports betting, and even cash delivery. Now guys, I'm an early investor in Bitstamp and really glad to see this because, Bitstamp was kind of a dying exchange and they just got picked up by Robinhood. So that's a pretty big bonus. And again, this is just kind of more proof that early stage investing in these companies that are changing the world, it takes time. I mean, I was investing in this thing like 8 years ago or something, right? So it takes time, but it's happening. And as more Wall Street comes in, looking for traditional companies to buy up, I expect this trend to continue. The line separating Wall Street and Web3 companies continues to blur. On-chain stocks are now reality. xStocks, working with Kraken and Solana, just turned more than 55 US equities like Tesla and Nvidia into tokens you can trade 24/7, settle globally, and self-custody. This is a wild shift from the Monday through Friday 9 to 5 markets that we're used to seeing. Chainlink, the backbone for so much DeFi, is now the official oracle for xStocks, delivering accurate pricing, proof of reserve, and cross-chain interoperability in real time. Chainlink data streams and proof of reserves make tokenized stocks composable and trustworthy. The xStocks Alliance has grown to include partners such as Kraken, Bybit, Radium, Camino, Chainlink, Bakkt, Solana, Jupiter, and Alchemy Pay, creating a robust composable ecosystem for on-chain capital markets. Users can now swap into real stocks like Nvidia and Tesla directly on Solana. If you ever wondered what an internet capital market would look like, this is it. And I'll tell you guys, I've been predominantly invested in crypto or equity from crypto companies, but there's been times when it's been pretty clear to me that maybe I should invest in a stock. But the fact that I had to go to like a stockbroker or a brokerage or just deal with things that are off-chain was a huge turnoff to me. And this is why I think this is so exciting for so many people. And this is gonna get just more and more money on-chain. And this will eventually flow into our crypto markets for sure. It's the same thing of like stablecoins, why stablecoins are bullish for the market, because it brings more money on-chain, more total overall market cap in the crypto markets, which will eventually flow into assets like Bitcoin, Ethereum, Solana, and eventually When it's risk season, risk assets, like lower caps, altcoin season, etc. Wednesday marks a historic milestone. The first Solana ETF with staking, its ticker SSK, launches in the US. The Rex Osprey ETF gives investors both exposure to Solana's price and on-chain staking rewards. The SEC confirmed no further comments on the ETF's N1A filing, making it the first of kind to reach the market. The ETF is structured under the Investment Company Act of 1940 and does not require the standard 19b4 exchange rule that we've seen for other ETFs. As a result, Rex Osprey moved ahead of its competitors and will launch before any other spot crypto ETF using this structure. Then there's been recent filings like Kraken Shares application for something similar to Coinbase 50 index ETF that we saw, right? Which is like Coinbase's top 50. Kraken's doing the same thing. This is a signal that crypto ETFs will not only be single ETFs like Solana, Ethereum, Bitcoin, for example, but they'll be broad indexes of various altcoins. That's exactly what my previous guest, Joe, said, predicting on his channel. If you missed that episode, check it out in the link description. Joe dropped some absolute bombshells about where these ETF flows are headed next. Bloomberg analyst projections show that many large cap digital assets, including XRP, Doge, and Cardano, are likely to receive spot ETF approval by the end of 2025. The odds are like 90-something% that they're gonna get approved. For a sense of scale, the latest market cap and float tables make it clear. As soon as these ETFs launch, you can expect billions of fresh capital investment to pour into these assets. It's inevitable that it will happen. You don't think institutions want exposure to Doge? Probably. It's gonna happen, right? This is the wildest thing about crypto and TradFi merging. The next big Wall Street wave has already started, just like we've been talking about on this channel. If you wanna make sure that you get positioned before the headlines, make sure that you guys are subscribed to the channel and turn on notifications. The macro backdrop has never felt more like early 1990s internet stock mania, except this time the playbook is being rewritten on social media in real time. This is something that the world didn't have before. They had to wait like a day to get their newspapers, right, and to get their news. But today, internet spreads at the speed of light. And here's a prime example. Check out this clip. Yes, this is actual handwritten note to the Fed from Donald Trump. Check this out.
The president sent this note to the Fed chair. It says, Jerome, you are as usual too late. You have cost the USA a fortune and continue to do so. You should lower the rate by a lot. Hundreds of billions of dollars are being lost and there is no inflation. And the president is right. There is historically low inflation thanks to his policies.
As stocks trade at all-time highs, the president and his team are openly looking to slash interest rates to 1%. A new Fed chair could be named any week, setting up a money printing run that could make the 2020 COVID stimulus look like a warm-up. But if you want a sense of just how fast this new regime could take hold, Treasury Secretary Scott Bessent is already openly saying, I will do what the president wants, right? When asked about becoming the next Fed chair. So he may be a candidate. Is he going to? I don't know, but that would be pretty awesome if he was, because our markets would absolutely pump. And the market is telling the same story. July is almost always a winner for the S&P 500, especially during big green years. The NASDAQ 100 just closed at all-time highs for the 5th session in a row. Remember, the market is forward-looking, and the shift to easier liquidity conditions gets priced in fast. All the market wants to know is who's the next Fed going to be, the Fed chair, and that's forward-looking, right? So it doesn't need to happen where we know who it is, he takes office, and then the markets react to that because he's actually not going to be in the seat until next year. But as soon as we know who it's going to be, if it's a dovish Fed, markets are going to rip on that news. In the background, political and regulatory chaos only adds fuel to this fire. Elon Musk is threatening to launch a new political party if the spending bill passes. This is just wild. Like, I don't know, guys, let me know in the comments below what you think if Elon launched a new political party and endorsed some other candidate. If the Fed really cuts rates to 1% and all assets are already at highs, this could be the most aggressive everything boom ever seen. If you want to see what a melt up looks like, pay close attention to the next 6 months. Institutions are making major moves, especially when it comes to Ethereum and Bitcoin. If you're wondering how serious this next Ethereum cycle could be, listen to Tom Lee. He was one of the first to call for a $55,000 Bitcoin all the way back in 2017 when Bitcoin was trading at just $2,500. Everyone thought he was insane, right? And just like people think that it's insane that Bitcoin goes to 10 million, it's not. It's inevitable. As long as a dollar keeps being printed, eventually the dollar to Bitcoin price will get there. Trust me.
What we've seen in the last, really in 2025, is the financial services industry and crypto are converging. And it really started with stablecoins, which is the ChatGPT of crypto, right? Because it's viral adoption by consumers, businesses, banks, and now even Visa. Underneath the stablecoin industry is Ethereum. That is really like the backbone and architecture of stablecoins. So it's important to create a project that essentially accumulates Ethereum to essentially protect and have some influence on the network. So that's why we're creating this treasury vehicle to buy Ethereum. The more Ethereum that's accumulated, the more secure the network is. And I think it's also sort of the architecture that future banks will have. You know, when Goldman issues a stablecoin and JP Morgan doing it on Ethereum, as a layer one blockchain, they're going to want to secure it by staking Ethereum. So we're trying to get in front of that by creating a treasury.
Why is Wall Street now openly front-running ETH accumulation? There's a question that you might want to ask. Well, every dollar of stablecoins means new fees, new staking demand, and a new use case for Ethereum as a foundation for the world's money. If you want to understand why Ethereum could actually become the backbone for the next global financial system, just listen to how Tom Lee frames his stablecoin thesis.
We've also seen what happened with Circle, the stablecoin issuer.
Yes.
Huge run-up after their IPO. So you're basically saying that this is the new Bitcoin. You're getting in at a very early stage.
Correct. That's right. Because let's say stablecoins, which is $250 billion today, gets to Treasury Secretary Bessent's reasonable $2 trillion. That's a 10 times increase in size. By the way, already stablecoins are the 12th largest holder of treasuries. They'll become the number one holder by then. U.S. dollar dominance is 27% in GDP terms. It's 57% of central bank reserves. It's 80% of financial trading transactions. It's 100% of stablecoin denomination. So by getting to $2 trillion, you're ensuring dollar dominance. This is very good for the U.S., but $2 trillion of stablecoins is a lot of network fees for Ethereum.
He saw the Bitcoin supercycle early, and now he's spelling out why Ethereum's real demand might just be getting started. And if you guys have been watching the channel for a while, you know that I allocated the rest of my fresh capital into ETH a couple weeks ago. When Tom Lee talks, the whole financial world pays attention. BitMine, chaired by Tom Lee, recently raised $250 million from a group of top investors, including Kraken, Founders Fund, Pantera, and DCG, to build an ETH treasury vehicle that buys and stakes Ethereum. Onchain Whales recently bought nearly 1 million ETH in a single day, the largest daily buy since 2018. The message is clear: big money wants ETH, and they want it now. I'll tell you guys a funny story about my Ethereum journey. So back in when Ethereum did their ICO in 2015, I thought it was a total scam. And I didn't want to trade my Bitcoin for Ethereum, even though it was like pennies. And then one day I was selling some Bitcoin to a guy on local Bitcoins, and he came over, we met up at a coffee shop or whatever, and he's like, yeah, I need to buy some Bitcoin from you. And I'm like, okay, like urgently wanted it. And he's like, yeah, because I need to go buy some ETH. I'm like, ETH, why? Isn't that like a scam? And he said, no, man, it's like cool. We're building applications. He was building something himself at the time. I think it was for like automated door locks or something like that. Anyway, I don't think that company made it. At that point, when he really told me how he was so excited to be building smart contract-based blockchain solutions, that's when I bought ETH at about $2. So if you guys think Ethereum's dead, I think again. It's just been lagging like crazy. And yes, Solana's probably a better blockchain, but I think institutions and everyone else are going to obviously make ETH run like crazy. Bitcoin's big money flows are also accelerating. The number of wallets holding $1 million or more of Bitcoin is at new all-time highs. And Germany's largest banking group, Sparkasse, is rolling out, how do I say that? Sparkasse. Anyway, it's my German accent. Is rolling out an in-app Bitcoin trading for 50 million users. And like my story with Ethereum before, guys, I mean, this is so interesting because it's now so easy for people to get Bitcoin. Before, the only way to get Bitcoin was on like really bad exchanges like Mt. Gox, who went insolvent, or you'd have to go meet up with cash at like a Burger King or a Starbucks or in some guy's car and do this transaction through using something like local Bitcoins. And local Bitcoins was a really good service, and it actually helped with trust scores and things like that. But still, I mean, it used to be hard to get Bitcoin back in the day. Today, it's so easy with the banks like these coming in and making it so easy. Oh, you want to just use your money in your digital bank to swap to Bitcoin? Okay, here you go, bam. And this is the infrastructure being upgraded, and this is why the whole world is going to come online very, very soon. But you guys are still early. US policy is finally catching up too. The Senate is voting on a capital gains tax cut for Bitcoin. Yes. And ETF inflows just hit $2.2 billion in a single week. Rick Edelman, one of the world's top wealth advisors, says with crypto making up 3% of all US wealth, anyone with zero crypto is actively shorting the market. Get that? Like, basically saying if by not having Bitcoin, you're bearish Bitcoin, which makes sense because your dollars are being debased away. He recommends conservative clients allocate 10%. This is wild. It's so much different than the guys who used to say, yeah, allocate 1 or 2%. But they knew more than that. They knew better than that, right? And now he's saying conservatively 10%, but aggressive clients should put 40% in there. These type of headlines were unthinkable just a year ago. Now, we see them so much, we're almost numb to them, but you have to pay attention. But make no mistake, we're living through mass adoption and it's moving at light speed. Well, most of the attention is on Bitcoin. Altcoins and new L1s are setting up for what could be the next big run. Sui, for example, leads 2025 DEX volumes with $60 billion year to date, far ahead of other ecosystems like Tron or Avalanche or Aptos or Ton. And before you write it off as just beating the smaller chains, take a look at this. Sui stablecoin transactions are about to surpass Ethereum for the month. Let that sink in. That's a 2-year-old network catching up to the OG. And it's not just on-chain numbers anymore. A car manufacturer just launched on Sui's chain this month, putting real-world businesses right on crypto rails. Like, I really do believe that Sui is going to be the Solana of this bull run. And if you caught the buzz in Hollywood, Sui even made a cameo in Brad Pitt's new F1 movie. That's mainstream adoption right there. Brad Pitt, F1, Sui. All-season sentiment is heating up also. I've seen it all over crypto Twitter. A little bit today, bearish because the market corrected, but still, it's still moving. With many analysts calling for Q3 and Q4 to bring the biggest altcoin moves. And that seems to line up with things like the potential rate cuts in September, M2 money pumping and being a leading indicator. All these things make a lot of sense. And what you're going to start to see likely is if we see this massive pivot in September from the Fed, people making their entry points in July or August, leading to the Fed pivot and the crypto market structure bills, which should be passed around September or October. And like I said before, that's going to be a huge catalyst for the space when crypto is finally legal in America. But today, we're still deep in Bitcoin season right now, which is exactly why so many altcoins are trading at cycle lows. When that rotation flips, and it always does, altcoin prices can explode with almost zero warning, and you'll want to have your bets placed before the real move begins. Now, this is your time to do your homework and get laser focused on where you're placing your bets. Don't be that guy chasing green candles. If you want a solid place to start, head over to CoinGecko and check out which projects are made in America. Think altcoin ETF approvals and which could come next, or TradFi corporate giants and which projects they're adding to their treasuries. And don't forget all the new rules being written for stablecoins and DeFi. The market is also rotating heavily into crypto-related equities. Since Circle's IPO, stocks like Circle, Robinhood, and Coinbase have outperformed most tokens and stocks, highlighting investor demand in real equity and legal ownership rights for crypto companies. Let me know in the comments below, guys, which altcoins or crypto stocks you're watching and why. And if it's really interesting, I might cover it in future episodes and give you a shout out. And guys, let's take a minute, just pause for one quick second, talk about today's channel sponsor, Blowfin, a no KYC exchange, open to America, low fees, every trading pair you could ever want, futures, leverage, long, spot, whatever you want. Just sign up, deposit $100 into your futures account, and if you're one of the first 100, you'll get $10 in Bitcoin, no questions asked. For every $100 you deposit, you get a shot to spin the wheel for prizes like Sui, Solana, and even half of a Bitcoin. Sign up with my link in the description below. It's a really great exchange. I've been using it for about a year now, and the reputation is stellar. And if you guys do sign up, even if you already have an account, create a new account there, and you'll be invited into the private Telegram. And when alt season is right, we always get all the alpha ahead of time, and you'll be invited into the private Telegram group if you sign up using any of my exchange affiliate links down in the description below. The instructions on how to get into the Telegram group are down there as well. All right, now back to the show. This week marks a fundamental reset in how capital markets work. Raoul Pal says the era of public versus private markets is ending. On-chain capital formation and lending have become more efficient than anything in legacy finance. And democratization is now accelerating. Every old barrier between Wall Street, DeFi, and Main Street is dissolving. Robinhood, Solana, xStocks, and Ethereum are merging into a single 24/7 global capital market. If rates move toward 1%, every asset class, from crypto to real estate to collectibles, could see an explosive run. For those without assets, the wealth gap could get even wider faster. Well, those positioned on-chain are set to benefit from a flood of institutional and retail capital. Right now, with all the big headlines and developments, the only thing riskier than volatility in this market is sitting on the sidelines and keeping your money in dollars and watching that be inflated away. If you want to stay ahead of the biggest shifts in crypto, finance, and the new on-chain economy, hit the subscribe if you're not subscribed already, guys. Hit the notification bell so you get the videos as soon as we drop them. Drop your questions, your comments below, your wild price predictions. I read all the comments. I'm curious to hear your thoughts. The everything pump is about to begin, and this is your chance to get ahead. Until next time, ladies and gentlemen, stay sharp, stack your Satoshis. I'll catch you guys in the next one. See ya.